Hey everyone, thanks for joining us on this week's Tax Rep Network podcast. I'm Eric Green. I am joined again by Paul Hammon. Paul, of course, the founder of RCReports. He's been on before. Some interesting updates in the world of reasonable comp. So Paul, we've been talking about, we've been kind of beating the drum. If you have an S corp, or frankly, nonprofit, right? 990, even a C corp in most circumstances the if it's the shareholder of the corp or it's a director of the nonprofit, you're supposed to have written documentation to support the reasonable compensation that is taken by that person. Uh, I'm willing to bet most people don't have that. And so generally we use RCReports. We can set salary, set the comp, and also know that we're bulletproof if the IRS shows up. The pushback has always been, look, they don't tend to do a lot of these. Is it really a big deal? Um, well, it looks like California is going to come in and kick the coffee table over because at the party because they that was a really interesting announcement. So why don't you, if you don't mind, update us on what you're seeing?
Yeah, well, first, thanks again having me on, Eric. And it's interesting because when the new administration came in, Doge came in, we started to hear some rumblings. We also saw some of the directives that were coming as far as automation, doing more with less, et cetera. And we were kind of looking to see what the IRS was going to do. Interesting enough, the first news on being more efficient and using technology more to go after really narrow issues like reasonable compensation is coming out of California. So, recently, within the last couple of weeks, interesting article coming out of California titled "How California Audit Triggers Are Changing in 2025." So, a couple of highlights out of this, and as I hit some of these highlights, we can expand on it a little bit. But more than likely, other states that follow California will start to adopt these. And these are very similar to what we suspect the IRS is already working on, based on just the information we're able to get from the inside out.
Yeah.
Um, but as of 25, California is now using new AI algorithms and expanded industry red flags to identify audit triggers, and identify patterns in owner's compensation and S Corp compensation.
Right.
And I think the biggest change, in my opinion, from how California was doing this in the past, and perhaps the IRS, is they were looking for fraud. They were looking for people gaming the system. Algorithms don't know that.
Yeah.
Algorithms are just simply looking for something that doesn't seem quite right based on other factors that it may pull in. And so that opens up the I guess the audit playing field, the number of people that can get caught in that net exponentially.
Right.
And it also speeds it up.
Look, what we've been hearing, we know for a fact the IRS is looking at the idea of a CP 2000 kind of a audit program around reasonable comp. And so for the folks listening, the CP 2000 is the notice that comes out when there's a mismatch. Hey, we think you missed a 1099. We think you owe us $20,000. If you agree, just sign here. If you disagree, specifically respond with detail why you disagree. So the idea was, are they going to and also as background, TIGTA came out with a report. I don't remember if it was 22 or 23 that basically said there's around 270,000 S corps. They audited the IRS files, 270,000 S corps where there was more than 100,000 of profit and no compensation was taken at all. So the idea is, or was, or what I hear is kicking around, what I'm told, is to simply send these people notices with a QR code. Say, hey, um, can you please, you have 30 days, scan the QR code and do the questionnaire. And the questionnaire would be like, your NAICS, code, with the region you're in, um, Do you provide services to your corporation? How many hours a week do you work? Basically, this questionnaire, which then, if you just target the people that took zero comp, if they provide any services at all, they're going to owe money. And what the government's going to do is say, based on your code and based on what your answers, and if we license RC Reports, let's say their database, here's what we think you owe us. Here's your bill. And I can tell you right now, if they showed up in our office and met with me, Lisa, Jeff, something like that, and said, we want to, and generally when that happens, it's just a notice of deficiency. So you have to file in tax court. If they came to me, what am I going to do differently? I don't even know how I would defend that. I'd be like, yeah, it's a collection case. You got to pay the bill, or we got to do an installment agreement, or maybe you can do an offer in compromise, or whatever. And so to me, it's kind of a no-brainer sort of a situation. There's probably billions of dollars that could be picked up that way. Um, but again, right now it's just talk. I've not actually seen them roll this out yet. And I'm sure you would have mentioned if they'd come and licensed your database. Um, it's interesting that California is going to be the first one out of the gate with something like this. I question how accurate their numbers are going to be because they're also not licensing your database, and I don't know if there's another database like yours anywhere. Um, did the article or the stuff that California is putting out, are they saying how they're going to do this?
They're giving some vague references to some different uh, benchmarks that they're looking at. But here's what I pulled out of this article, which is, what they can find available to feed into their AI model will pull a number. And if they feel that number doesn't match up with whatever range they've selected, that's when you're going to get your notice. Their number doesn't have to be accurate for you to get your notice, but if you don't have any backup, you're right where the CP 2000 notice that Eric just talked about is, and that's the issue. And so what'll be interesting as these start to roll out is, do they look to our database for the source of truth so that when they send one out, they can really be on point? And if you've done this correctly, because ours also uses the recognized approaches and methodologies in court cases, then if you did take a guess at this, a finger in the air, and you happen to hit the target, and I've seen that happen, you'll probably be left alone. But if you were to run one of our reports and it fell outside of California's new AI algorithms, that's okay because you've got a backup and you can show how you did it actually with the proper methodology, court cases, and other backups. So that's what's going to start to become interesting because so few people don't have this documented.
Right. And so if you're a tax pro listening to this is why you run the report. So, like, for instance, I have always been advising them, you run the reports for your client. First of all, any S Corp or any nonprofit, you need to have the report. We've talked about Bob's horror story. Bob was a CPA in Connecticut. Clients basically were taking little to no reasonable comp. Government went after him and fined him because what they were saying is that he knew the returns weren't accurate. And the proof of him, asking clients to do this. So first of all, you shouldn't be doing the returns anyway if they don't have this. But getting them to do this, it's part of the deal. But more often than not, when we run this for people, I find that we can reduce their salary. The people that are taking salary, they're just making up numbers. Well, I'll take the 168,000, right? I'll take the max for Social Security, FICA, and that way they can't question me. We've had people where we've been able to cut that in half and save them 10,000 a year in self-employment tax. So first of all, you want to run the report anyway because you're supposed to have written documentation. Two, you might save the client a bunch of money, but you also bulletproof because I can assure you whatever California shows up with is not going to be as good. But that's really the answer. And the other thing is by doing it before year end, you can not only fix the current year, which would be 2025, because fourth quarter you can always kind of bonus or whatever and make sure that you're in range, but you can set it for the next year because I think there was an article I saw. We were talking about this where California did come in and they kept the same salary year after year, and they actually fined them, saying, yeah, but you weren't rerunning it every year to adjust.
Yeah, so yeah, that was also recent. And so in their new algorithm, because it's much faster now, I mean, it doesn't take years, right? They can flag this stuff pretty darn quick with quarterly filings and other things as well. And so somebody had set their comp for 2023 and just chugged on into 2024 with it. They get a $6,000 audit adjustment because California felt that wage had jumped up significantly in 2024 and this person hadn't looked at it. So again, a prior year's documentation uh, may not save you. It may, but in this person's situation, it didn't.
Yeah, I mean, well, listen, it saved you from the bulk of the problem, but you still had the adjustment. So, yeah, our thing is you should run it every December, because by running it in December, now you've set it for that current year. And if you have that every year and you can pull and show that to an auditor, you know what it does? And this is from the litigator's perspective. If we end up in tax court, what it shows the judge is you acted as a prudent person. You ran a report from a great database and set your salary accordingly. So unless they could, because I know when we get the RC report, it breaks down, the number of hours I spend being an attorney, the number of hours I spend doing administrative stuff or whatever. I mean, that would be the way to attack it. Would be like, wait a minute, Eric spends 35 hours a week as an admin and only 5 as a lawyer. That's why your number is so low. You could get into that. But if you've done this properly, my experience, and I haven't had a ton of these, but I've had probably about 4. You give them the report from RC Reports, they flip through it. They just say, "Can I get a copy of this for the file?" And that's the end of the reasonable comp audit. At least that's the end of that part of the audit. So it is one of these critical things. First of all, the client's supposed to do this anyway. It's not like Paul, it makes me nuts. We talk to the CPAs or the EAs, and they're like, "Oh, my client doesn't want to pay for that. They don't want to do that." First of all, I would increase your fee. It's just part of the S corp return. They got to do this. But two, that's part of the deal. If you want to be an S corp and you want to save money and all the rest of that, this is part of the deal. It just
Yeah.
has to be. Um, so
Yeah.
first of all,
So
they're supposed to do it anyway, but there's also the audit aspect. California, and by the way, if California does this, you and I know so first of all, if people don't realize this, all of the commissioners for the departments of revenue, they actually have, I think it's a couple times a year, they actually have meetings. They all get together and they present on best practices and whatever. This will roll out all over the rest of the country. All right. It might take a year because other people are going to I can tell you right now, Connecticut is going to look at this. They're going to have to. New York certainly will. And because Connecticut, New York, Illinois, Florida, Pennsylvania Washington State are all very aggressive departments of revenue. They're going to look at this and all they're going to figure out is how do we roll this out and go after this? And they're going to do that. The IRS will not be far behind because they're not going to get left out of the act.
yeah.
So this is kind of like we've been warning about this. We've been talking about this. It's interesting. It's California, not the IRS, that's going to fire the first shot, but it's coming.
Yeah. Well, and also those state adjustments tend to get kicked up, right? So the IRS is going to assume if you made a deal with California or audited in California, then
You
all
should
right,
amend, you should amend your federal.
yeah, absolutely. And just like the 990 that actually has a checkbox requiring this, the IRS is looking from our information that a very similar program to that for the 1120S. So this may be something that you've got to check off anyway. Uh, but when you were talking about doing this proactively and having that report in hand, of course, we've been doing this for more than a dozen years, and we've never had a proactive report challenged, right? You hand it across the desk, but that's also part of the way the IRS guidelines work, which is it is the taxpayer's responsibility to research and document reasonable compensation. If you do that, then the burden of proof shifts to the IRS. If you don't do that, you're at the burden of whatever the IRS number is, and then you end up fighting that battle. And that's the majority of how I spend my time, is in reasonable comp challenges. And the way reasonable compensation challenges that I've mainly worked on over the last dozen years looked is an examiner would come in, that it'd get challenged, it'd go back and forth, and it could end up in a number of different results. I think the frustration for tax professionals moving forward, and possibly even your firm, Eric, is it's going to be really hard to get a human, right? It's going to be a battle of documents.
Right. Right. No. So yeah, this is going to be interesting. We are going to, I think, be covering this at the summit in December as a topic. And I'm just, I think we're going to start to see really interesting times. Not just reasonable comp, but with the use of AI and algorithms, it's going to allow the government to do more, get at more taxpayers, and frankly, target people better. So no, I think I had a senior partner 25 years ago who told me once, he said, you know what we need? We need the government to get aggressive again. And so it took 25 years, but guess what? They're getting aggressive again. So, and again, this does drive home the point. Don't forget about the state. Like I tell people, everyone's afraid of the IRS. Screw the IRS. Fear the Connecticut Department of Revenue. I mean, they are very aggressive. They have far fewer rules, far fewer taxpayer protections, and especially in the sales tax area, if you don't want to cooperate, they'll pull your sales tax permit. You're out of business.
Yeah.
So, no, I think what I found so interesting about this is that California is the first out of the gate with it. I really, really thought it was going to be the IRS. So, interesting times, but
Yeah.
so we'll be doing a follow-up on this for those of you coming to the Tax Rep Summit or joining us on the live webcast. We're going to do a program on this. And we'll probably do another webinar too further on as we get closer to year end because it's always timely.
Yep. Yeah. So the article and something Eric and I talk to you all about on a regular basis when we cover this topic is document this, right? Have it in a file because it goes away really fast if you do, and if you don't, it is it's a big lift to get to the other side of it. And after helping people with challenges, for more than a decade now, the first thing I hear on that introductory call is I've never had one of these before, which is what everybody says until they do.
Yep. No, it's and if you don't have anything, now you got the payroll tax, you have the penalties and the interest, you got W-2, W-3 issues. This is the kind of thing that for the government, it's the gift that keeps giving. And for the taxpayer, it's a nightmare. So no, this is one of those, just be proactive. And for the taxpayers who do this, you can actually run a single report from RCReports. If you go to RCReports.com, Paul, you guys rolled this out a little while ago where someone can just run one report.
Yeah, as a business owner, if you're unrepresented, or your CPA wants you to do this on your own, sure, you can pop over there and grab that report. If you're a tax firm, right, set up an account with us because I think Eric's advice is the best advice I hear on how to deal with this, which is it should just be part of your 1120S package. And if they need to do this because it's also going to protect you because you're going to be the one representing this person when it's challenged.
Yep. No, and the way to make money with this, because I always get this because I mention it and people say, well, so how do you make, you're saying you make money with this. So your S corps need to have this, 990s need to have this. But if you're gonna like Paul, if I sign up with RC Reports, to me, I can tell you right now, I go into Jeff Sklar's office and I'm like, hey, I want to get this software. Going to be $2,000, $1,800, whatever. With the tax rep discount, I think it's like 1,700, whatever it is. And he's gonna be like, okay, how are we making money with this? What's the ROI? Well, what if I pull the list of my LLCs, anyone making, 90, 100 or more, say, hey, now you're thinking, I can't sell them a report. You don't sell the report. So you've got the software now, right? You go put it in, it comes up with roughly 70,000. I call the client, say, look, you made 150 last year. What if I could save you $10,000 a year? In 10 years, I got you an extra 145,000. I've yet to meet the client that says, yeah, donate it to the government. They need it more than I do. They're going to be like, oh, hell yeah. How do we do that? Look, we convert you to an S corp. We're going to save about 12.5 a year. But look, you got to pay for an S corp return. All right. We're going to run the report every December. So that's going to cost you like $3,500. So I'm looking at 9 to 10,000 a year. You're going to put in a profit sharing plan at 8% return. You'll end up with about 145,000 in a decade in your own retirement account. Clients will be like, sign me up. You're selling the benefit. All right. Like for the old, no one buys a drill because they want to drill. They buy a drill because they want a hole. Right. You sell the tax savings. So like we have RC reports, we pay for RC reports, but we make 10, 15 fold and we don't do returns. We only do this during audits and other things. So for a tax pro, this is one of these business opportunities, just doing the right thing by the client. Save them money. They're now following the rules they're supposed to be following, right? They're supposed to do this. And you save them money, you're gonna make more money, and you're gonna make them bulletproof the government doing what they're supposed to be doing. It's one of these win-win-win situations. So
Yeah.
yeah, rcreports.com. I'll put the link in the description below. So for the tax pros, you get the account, right? Because you're going to do this for multiple existing clients and they're going to go to your LLCs and you're going to start making money and saving them money. But if you're a solo person, a business owner, you can go run your own report. Um, I know we're talking California. This is going to be everywhere. Give it 2 years. It will be everywhere. All the states are going to jump on board because there's too much money to pass up.
Yep. Well put. And one of the things that is really taking root after years of it being talked about is client advisory services, which is looking at your LLCs and seeing if it makes sense to move them over.
Right.
That's the positive side of reasonable compensation. Knowing what that number is, you can properly advise your client. And I think that's one of the biggest surprises when people do use our software is we have tools in there to help you look at whether that's profitable or not, give a deliverable to your client. So yeah, you're going to charge an extra $500 on your 1120S to keep them compliant, the ones that are already there. The ones you're going to convert, that's another great ROI. It's another great moneymaker. Plus, you're going to save them money too. It is truly a win-win-win.
Exactly. So everyone go. I'll put the link below. Check out RC Reports. Any questions, reach out to Paul, reach out to the whole RC Reports team. They're fantastic. If you have an audit going on, but be proactive. Get your clients to be proactive. The best defense is to have this all done in advance. So, Paul, listen, thank you for coming on. Thanks for the update. Everyone, thanks for joining us. And see you next week on the podcast.